Hello, master traders and money magnets. It's so great to see you guys today. Looks like the rejection that we had yesterday from the 50 daily moving average definitely showed some follow through today, going to a low of 572.25 is uh very close, very close to hitting that 200 daily moving average. It was around the 571ish level. Didn't quite hit it, but man, it got so close. It's been a couple of years. It's been a couple of years since I don't think we hit that. If we stroll all the way to the left, we haven't hit the 200 daily moving average since October into November of 2023. So it's been a while, and here we are very close to hitting that level, and then we got a bounce intraday. It was an incredible trading day. I'm telling you guys, volatility is here in the market, and I hope it stays. There's money to be made to the downside, money to be made to the upside. Let me show you guys if that's my Discord. Well, now that we're on the Discord, I wrote here on the Discord on the first post of the day, 580 is the next support. And I wrote, if it fails, 578.5, 577, and 575 are incoming. And I wrote no bounce unless price starts changing its behavior by turning resistance back into support. 582 and 583.5 must clear. We needed to see breakouts of resistant levels. Instead, the market decided to start us off with a breakdown of support. First of all, at the 930 candle right there where I pointed at, it actually rejected from the 580 level and broke down the 578.5 level, eventually broke down that 577 level, going pretty low, going as low as 572.2-ish before it started to chop. So we started off the day breaking down support levels and giving us this beautiful drop to the downside, multi-level move. And then we consolidated before we recaptured this one level, this 575 level. It recaptured around 1130 candle. You guys see where I'm pointing at the 1130 and the 1145 candle. As we was breaking down, I, alerted the group. I kept the group updated in the Discord. But once we got that breakdown and then the recapture, I wrote 575 cleared here, putting 577 in play. Very important we play it level to level, because once we recaptured 575 on that 1145 candle and I alerted the group, it hit 577. It actually went higher up to 578.5. But as you guys can see why it's so important to go level to level, because it started chopping. It broke back down 577. There was a bit of confusion. But if you play it level to level and leave runners with a trailing stop loss, you would have been fine. But eventually, the market did clear that 577 level on the 1 o'clock candle, and it back tested it as support on the 130 candle 30 minutes later before popping some more to the upside, clearing 580 and the 145 candle, and just continue to go up, going up to 585 before that nice drop at the end of the day. False breakout setup at the end of the day. Guys, it was just incredible. Like, whether it's to the upside or to the downside, there's just so much money to be made. And I hope you guys caught a piece of the pie. All right, guys. So now we got to talk about what is the next plan. All right. What is the last critical level that was lost today? Well, we got an official close below 583.3, which is the 23.6 fib level. All right. So that right now is the last critical level that was lost on the daily chart. And as long as below that level, Unco charters will remain bearish, right? Right now it's around 580-ish. From here, support's at 580, 578.5, 577, and a critical level around 575. Okay, this was a pivot low back on January 13th. Now, I talked about some M pattern. We had this M pattern that started from January 13th and it played out beautifully. M pattern played out beautifully. But if we zoom out some more, we can see there's a potential bigger M pattern that could be playing out. And that 575 level is that pivot low that can make this a potential M pattern. So if it's lost, it's going to be very bearish. And then you got the 200 daily moving average, which is around 571. If that is lost, that will be extremely bearish. Okay, so the bottom line is below 583.3 keeps today's breakdown intact, which makes it overall bearish. Breaking down more of those support levels that I mentioned, 580, 577, 575, the 200 daily moving average at 571. Breaking down those levels would give us more downside, okay? Trust, no bounce as usual unless we can recapture some lost levels, starting with, well, we have a resistance at 582 and the critical one at 583.3, 585, 586.5, and the next fib level at 588. We need to recapture some lost levels. If we get a catalyst, great. You know, having a catalyst would definitely help out the bulls right about now. They could really use some catalyst. Maybe a deal could be made with the tariffs or anything. Some type of good news, all right? But at the end of the day, even if we get a catalyst, it must be confirmed by the price action. And if there is a bottom, if there is, then we need to see the price action behaviors change, recapture lost levels, turn resistant levels back into support, turn sell zones back into buy zones. Then we can start getting bullish again, because as of right now, it's still looking bearish. And if we lose those levels that I mentioned, there's going to be a lot more downside. Triple Q, well, gotta be careful here with Triple Q. We got a big body red candle from Monday. Today we got ourselves like a doji looking candle. All right, it gapped down and gave us a doji looking candle. It could be one of those bullish reversal 3 pattern candle. I think it's called the Morning Star. I think that's what it's called. So usually with the Morning Star, the third candle would be a gap up. Well, we'll start with a gap up and then it end up being a big body green candle. So we got to be careful with that. If it is to be bullish tomorrow, I have levels at 499.7 and 501. If those levels clear, 503, 505, 507, and the fib level of 508.5 would all be back in play. If there's no morning star pattern, then, well, it's not bullish. Staying below 499.7 is overall still bearish for me. Breaking down more support levels, 498. Well, it actually broke those levels down today, but we're gapping up. So I have 498, 496.5, 495, 493.5, 492, and the fib level at 490. There was a battle there today, but if bears can win and break it down, definitely bearish continuation. Well, Tesla continues to be bearish. Okay, another lower close here, and we also closed below that 200 daily moving average. Holy moly, donut shop. Getting a bit of a gap up in the aftermarket, but it's gonna need more than that. This ticker symbol is gonna need a lot more than that. First, what it needs to do to be bullish again is recapture that 200 daily moving average. I would trust it if it gets above 280. I'll trust the recapture if it gets above 280. Clearing the next critical resistance level, I'd say 283 around the fib level area. Got to clear 283 to put higher levels in play. 285, 288, 290, and 292 would all be in play. None of those will be possible unless Tesla can recapture the 200 daily moving average. Get above 280 at the very least. Because if not, and it starts breaking back down support levels, 276, 274, 272.5, 271, and 269, guys, Tesla's going to continue to be bearish. And here we have NVDA. Well, yesterday we closed right at the fib level around 114. And while NVDA managed to keep its price above 114 and avoided a breakdown, a close below it. So that level is still a critical level to watch. Right now, though, NVDA is messing around the fib level that I have around 117.5, gapping up. I have next resistance at 120 and 122. If we are to get a bounce, a bigger bounce, and more upside is to be had, then those levels must clear to put 125, 128, and 129.5 or higher in play. To be bearish, I need to see 116 and that fib level at 114 fail. We need an official close, a breakdown to put lower levels in play. 112, 108, and 106.5 and 105 could all be targets to the downside. Here is IWM. Same thing with very similar situation with triple Q. IWM here we have a big body red candle followed by a gap down with a doji. Guys, here's an example of a morning star pattern. You see the big body red candle, and then the second candle is a doji, gap down in the doji. Then it heads into the third candle, gap up in a big body red candle right there, guys. So that's what I'm watching with triple Q and as well as IWM. Is that what's gonna play out here? If it is, we gap up and clear resistance at 210. That would be bullish, guys. Put in 212, 213.5, 215 or higher in play. Okay. Now, if IWM can avoid a breakout of 210 and break down support levels 208, 206 or lower, then guess what? There is no morning star pattern, no bullish reversal. Okay. Apple's looking bearish. It managed to get the daily chart close below that 237 level officially. All right. As long as below 237, I am bearish on Apple. 237.2 actually. As long as below it, 236, 234, 230, and 228.4 are all in play. If there is a bottom, we need a false breakdown setup. 237.2 must recapture and clear 240. If that happens, then more upside is possible. 241.5, 243, 245, and 247 would be targets. Here is Amazon. It hit that 200 daily moving average, guys. Managed to get some buying pressure from that area, and it managed to avoid a breakdown of the 203 fib level. That level was a buy zone yesterday. Amazon managed to close above. Now, the next fib level I have is at 206. If there is a bounce and more upside, is the plan. Needs to clear 206, 207.5, and the fib level at 210. We must clear those levels to put more upside in play. That would be 213, 216 or higher. All right. If more downside is the plan, then we need to break down 203. Okay, 204.5 and that fib level at 203. Almost had it today. Bears almost had it, but they got to bring it home and give us that daily chart close below. So breakdown of 203 will put 200 or lower in play. The 200 daily moving average is around 198.5-ish. So breaking that down would be a big victory for the Bears, guys. Microsoft, well, it pretty much closed around the same area it closed yesterday. It looks like one of those bullish counter attacks. Will there be follow through though? It's not bullish unless there's follow through. So if there is, the level that it must stay above is 388.6. And the resistant levels that it needs to clear is 390 and 392. If that happens, I would be bullish on Microsoft with 395 and 396.3 plus in play. Below 388.6, I would be bearish and I would favor more downside. 387, 385 or lower incoming. I think we could drop back down to 381 or lower. Meta looking bearish. It managed to give us an official close below the 50 daily moving average. And you can also see we had like a double bottom around the 642-ish area. We closed that below that as well. All right, today's close was around 640. But look where we are in the aftermarket, around 645. Holy moly donut shop. This market is crazy. Now, if we are gapping up and we need and there is to be more upside, I have resisted at 648 and 650. And the 50 daily moving average is at 651.5. So if we can clear those levels, maybe we can go for the gap fill at 655 or be even more bullish. Clear 655 and send us up high at 658, 660 or higher. Now, if we are to be bearish, we need to look at the level that was lost today before we got this aftermarket gap up. And that level, all right, is 642.4. So support that I have right now is at 646, well, excuse me, 644 and 642.4. Bears need to break back below those levels tomorrow to put lower targets in place. 640, 638.5, 637, possibly all the way down to 635 or lower. All right. Overall, it needs to get back below the level it broke today to cancel this gap up. That level 642.4. If it does, we are bearish. All right. If we are to be bullish, like I said, we got it recaptured at 650 level, which is a fib level, and get back above the 50 DMA, which is around 651.5. DXY is looking very bearish. Look like it wants more downside. Next support's at 105.5. If it breaks down, 105.1 and 104.6 in play. Resistance at 105.8 and 106.2. Got to recapture those levels to get a bounce going. Coin. Wow, I love this ticker symbol. So much volatility. I do have that fib level still at 214. That will be the equilibrium for tomorrow. If above it, we did get a bounce today. So if above 214, we could get a bigger bounce. I have next resistant level at 219. Okay, 217 and 219. If those levels clear, more upside is possible. Possibly send us up to 224 or higher, which would be a very nice move to the upside. Okay, if we are to be bearish, we got to break down 214. Break down 214. That will put lower targets back in play. 212.5, 211. And I do have the next fib level around 205.8-ish. Okay, 205.8-ish would definitely be a target. Here is DOGE. Not much to say about DOGE except that it's still bearish. Okay. Levels that I need to see clear. At this point, we got to update level here at 22 cents. And this pivot high here around 24 cents. Okay, maybe we can get a W pattern playing out. And if that is the case, 22 and 24 cents must clear to put 26, 28, and 30 cents in play. Otherwise, still looking bearish to me. SMCI. I wonder if this is one of those piercing patterns. That could be a bullish reversal, okay? Could be, not guaranteed, but the level to watch is 39.3. If above that level, that will put 41.5 and 43 in play. If those levels clear, SMCI can give us a bigger bounce. Okay, guys? If this is not bullish and support at 38 and 36.7 fails, that's going to be bearish and more downside is possible. 34 or lower. All right, thank you guys so much for watching. I appreciate you guys. I'm so grateful for you guys for being here. Remember, you guys are money magnets. Money flow to you guys easily and abundantly. All you guys got to do is know the levels, know the setups, and trade it unbiasedly. Peace.